Alright guys, hope you're doing well. I'm just at Heathrow Airport at the moment. I'm about to fly over to Turkey, but I just wanted to share with you a couple of setups that are on the radar. There's lots of opportunity this week, and there's an important message behind this video as well. So take a look at the analysis and enjoy. So the pound dollar is rolling off a cliff. Okay, we know this doesn't go on forever. It's a bearish market, and yes, you might want to sell this. Do you want to sell it right now? It's like trying to catch a falling knife. You don't want to sell it right now because the chances are we're going to see a little pullback. Doesn't go on forever. RSI's gone oversold. One thing I am interested in is look at where we're actually trading right now. So horizontal line 27.36 is where we're trading right now. We've hit that like a brick wall. Let's scroll back and see what happened historically at that level. Well, wouldn't you know, we had previous. Let's just bring this on and bring on our. I'll move this. No. Okay. So we had our resistance. It was also support, support, resistance. It then became support. It became resistance, and it was previous support as well. So this little zone here, if I just draw this out, so it's really, really clear for you guys to see. This little channel here is a beauty for reversals. Does everyone agree with that? Okay. Is that enough to take a trade? Absolutely not. But what we could do is say, well, if we're a structure-based trader and we can take certain discretionary trades at previous structure support, major levels of structure support, which provide a lot of confirmation, a lot of high probability. We can apply some filters and some discretion and some confluence to build up a confident entry system. Then, without being greedy, there's a lot of high probability moves that we can capitalize on here. First and foremost, I want to say this. Some of you might be thinking, well, if we're expecting a pullback up to here, that's where my target should go if I'm looking to get long. For me, I'm not that aggressive. I'm looking at inside structure in here for targets, okay, which just so happens to line up with this pregnant pause that we had right here. I don't want to have to wait and push through unnecessary levels of structure. I want to be in and out of the trade as quickly as possible. So that's the higher time frame. The prediction is we're likely to see a pullback here. We're likely to see a reaction at this level. How can we get involved? Let's go down to the trading time frame. Let's free up some room here. On the trading time frame, the first trading time frame, which I can also use as a higher time frame as well, we've seen this little pullback. Okay, now the lowest low to the lowest close is this candle here. So those of you guys that are looking at a double bottom, so you might not have entered yet, even though we had a 3-bar reversal. We had a higher high, higher close on this candle here. Okay, you may have entered at next bar market, which would have been around 27.39, 27.40. You would have been in this. If you're a bit more conservative, you might be waiting for a time and price symmetry, nice little V shape here, which we know as a double bottom. And where you're looking for that double bottom is a retest. For me, this is how the lowest low to the lowest close. This is the test that I need. Okay, so I can already. Let's delete that off, and I can already identify where that zone is, which is here. Right, is this making sense so far? Now all I need is a test of that level, right, on the 4-hour. Now on the 60, if you was up a bit early and a bit sharpish, you guys know that I trade descending channels. I don't trade them on this particular pair, but I do trade them on New Zealand dollar, dollar yen, euro dollar, Aussie dollar. And you can see we had a descending channel where we had bullish divergence on the RSI, lower lows on price, we bottomed out and rallied up, and we still haven't hit the would-be targets on that yet. So there is a descending channel that's already played out. For me, I would personally be waiting for a retest of this zone, and as long as we test the zone but don't close below it, then I can enter next bar market, and then my stop loss will go wherever the ATR is below this low. Okay, currently the ATR is sitting at 40 pips. So big ATR on this pair, which is expected, and we're at 27, so we'll be at 26.60 for stops, somewhere around there, and then targets again, not greedy. If we just zoom out a little bit to where we were last at, I don't want to be greedy with targets. I want to be well below that previous level of support. So the easiest way to do that is to go out to the daily time frame, look at the higher time frame analysis. I moved the thing, didn't I? That's why it's yeah, I moved the thing. Yeah, I want to be below that previous spike. So it's not the best reward to risk profile for a double bottom. It's a 1.3 to 1, but it is a very high probability play if we get the double bottom, which it looks like we're going to. So I've just got to wait for the close of this candle, and then I can enter as long as it's in here somewhere and doesn't close below the low. If that's all met, the lower we can get, the better, because obviously my reward to risk profile will be better. A 2 to 1 would be nice, and then I'm in the trade. Why is it important to wait? It's important to wait because if we close below, then that's a completely rubbish idea. That means that there's a low probability that we're going to see a rally. That's the difference in reading price and being patient. That's why patience pays the bills. So keep an eye out on this, and that's something I'm looking at for later today. So very similar situation on the euro dollar as the pound, except some might say we're more bearish on the euro. We are in a bearish market, yes, and we've just had a lower close following this previous low. But again, look at where we are in the grand scheme of things. If you're a trend continuation trader, that's great, but there are certain levels where you may stop looking for a continuation. And the reason you stop looking is because you've got the discretion to adapt and take advantage of certain rotations or certain high probability moves, structure-based setups like extreme lows, extreme highs. Some of you have got discretionary levels in your playbook, what you pay attention to certain price points that have been respected more often than not over the years. I'm primarily a trend continuation trader. However, there are certain price levels like extreme lows like this one where I'll look to adapt that and take advantage of the ride up. Now, there's a couple of things that play in our favor here. One, obviously we're at a major structure support level, okay? Two, we're just coming off the back of a strong bear run here. So even if you're a continuation trader, you know that we're likely to see a pullback before continuing on, right? So this area here, we are likely to see a lot of buy orders come in, because the people that are already short will be looking to take their profit here, which will be a buy order, a buy limit order, or an at market order. And the people who are structure-based traders are waiting for price to push down here to put a buy order. So as we start triggering in all these buy orders down here, we're likely to see a quick little rally, a relief rally I call it. So the question is then, how can we get involved? Now, like the pound dollar's putting in a nice double bottom. With this one, it looks like we're putting in a double bottom right now, but I wouldn't like to get involved until we test this zone. Okay, because if I get in now, the chances are we're going to push down into this zone. We know these levels act like magnets, so I don't want to get involved. So this is going to require a lot of patience, because a lot of uninitiated traders will look at this, get excited, have fear of missing out, be scared, and say, oh, I'll sod it, I'm just going to get in now because it looks so nice, it's at the bottom of this double bottom. But the problem is the double bottom is in the middle of nowhere. Okay, it's not at the high probability zone. Now, yes, it may rally and I might miss out, but guess what? I can pat myself on the back for having the analysis correct that we're likely to see a rally, but I didn't lose money. Okay, and then in the future, I can optimize, tweak, refine, really kind of build some discretion, do some post-market analysis, and maybe become a little bit more aggressive, maybe tweak my system to be a bit more aggressive in the future if this level's ever tested again. But for now, I want to test this level, then I'll look for my entry. Okay, now with that said, because of how we're moving here, we may not get a double bottom down here, but we'll see. And patience pays the bills. We're not oversold on the RSI on this one. On the 60 minute we was back here, but this is much more of a kind of sideways move. All right, and the pound dollar put in the nice descending channel, and this is kind of just still hovering sideways. So the only other thing that you might be looking at on this could be a potential pattern setup, but that would be, of course, in the bearish continuation. So those of you who trade pattern setups, let's just go down to the 15. I think it'll be a bit more easy to see on the 15-minute time frame. Those of you who trade advanced pattern setups, they're very, very popular with the trading community. X, A, B, C, D. This would be a Gartley setup. So a bearish Gartley. So you'd be looking for an entry at the 127 extension for the completion, and then looking for a rollover there. So patience. All right, and then two more setups here that I want to share with you. One's on the pound yen, one's on the dollar yen. And there's a couple of characteristics that I need you to be aware of if you're looking to trade these pairs. One is that the dollar yen definitely doesn't move like some of the other pairs that you might expect. You typically don't get the nice ebbs and flows and pullbacks and things that make some of these moves more predictable than others. But the pound yen, there's no doubt about it, we're bullish. And although we've seen a rollover recently and a little bit of a fake out here, we are still in a bullish market. And if you're familiar with the Graystone trend continuation, what you're essentially looking at is a 3 or 4 chance entry into a continuation. Okay, so you can see here we've had this higher high, higher close, and then we've rolled over. And the 3 zones that we're looking at initially are zone 1, which is the highest high to the highest close of the previous high. Zone 2, which is the previous low to a 1-to-1 move, and I'll explain that in a moment. And then zone 3 is the lowest low to the lowest close of the previous pullback. Now, the ways you enter this is either you drop down to your trading time frame or lower time frame and look for a retest in zone 1. You look for a higher close candle in zone 2, as long as you get a 1-to-1. And you look for a retest on the zone 3 on a lower time frame, and that's going to be the least likely to play out. It's it provides the least opportunities, but it has the best reward to risk. You only need a few of these, and you get 4 or 5-to-1 on every trade. So you don't need many of those a year to really accelerate your trading account. So that's what we're looking at. If you're, and then the final way to enter that, obviously, for you pattern traders, is you just wait, and as long as we don't retest high, this high, as long as we get a kind of pullback that's below testing this high, because if we test the high, then that's a rejection. You could get an advanced pattern set up which give you aggressive entry down here for a long, and you can use that as an excuse to get involved for a long opportunity. Now the dollar yen, very, very similar to the uninitiated, except yes, we're at an all-time high. I think since 2002 we haven't seen these highs tested. But the differences with this pair is you don't get the pullbacks typically. What you get is this. You get this compression and breakout. Compression, breakout, flag, breakout, flag, breakout. And what we're seeing right now is exactly that. We're seeing a compression channel. Very familiar, very popular setup. This is how I got involved with many of my trades, particularly on TradingView, or if you go and look at my Bitcoin video, it's very similar. And we're at the low of the channel now, so this could be a breakout, and if you're trading an extension of the flagpole, your target's going to be around here. This is the kind of example that I gave the live room members this morning. But the other way that you could enter this, of course, we haven't tested the high here, so this is still valid to use a pattern entry for this as well, for a continuation, and this would be a bat pattern, what you call a bat pattern, and it'd be down here, the completion point 126.50s, and that would be your aggressive entry into a test or a continuation. So little subtle differences on approaches there. One word of warning I would say is there's a lot of opportunity, there's quite a bit of news out, there's a lot going on in the world at the moment, and whenever there's like lots and lots and lots of opportunity, you really want to double down on focus on your A+ trades. Okay, you want to pick out the best ones. One of our professional traders, Tony, in our room this morning said, you know, really when there's lots of opportunity, it is important to focus on your best ones. Now, you either stay out of some trades and only take the best ones, or you dynamically adjust your position sizing and manage your risk management and money management so that you can take all of the trades, but you're placing most risk with the best trades so that you're not overexposing yourself. Because if you get lots of opportunity and you're taking 1% of risk on every trade or whatever it is, and you're in 10 trades, you know, it's 10% of your account wiped out if they all go against you. So be safe, don't get too excited. Lots of opportunity. There's always going to be opportunity to make money in the markets. Stay safe, and I'll see you in the markets.